Let's get right to it. The world is waking up to a seismic shift that could reshape global power dynamics. China just made a move that's shaking the world, sending shockwaves through international markets and diplomatic circles alike. China has abruptly ended a secret economic lifeline that was propping up Russia's metals industry: aluminum, nickel, copper. These metals are the backbone of Russia's export economy, fueling everything from construction to technology. For months, Chinese state companies paid Russian producers above-market prices, funneling billions into Russia's economy despite Western sanctions. This covert support helped Russia weather the storm of international isolation. Now, Beijing has quietly cut off these subsidies, leaving Russia exposed and vulnerable at a critical moment. The estimated annual value, $60 billion, gone overnight. That's a staggering loss, with immediate consequences for Russia's financial stability. This wasn't a public spat, but a silent, devastating blow delivered behind closed doors, catching many by surprise. The alliance between China and Russia, once touted as no limits, is now revealed as a partnership of convenience, dictated by shifting interests rather than true loyalty. China's interests have shifted, and Russia is left scrambling to find new buyers and allies, facing uncertainty on all fronts. The Kremlin's image of resilience is cracking as officials struggle to contain the fallout and reassure the public. Russia's economic strategy just lost a critical pillar, and the effects are rippling through its industries and workforce. The fallout from this decision is only beginning, with analysts warning of deeper instability ahead. The game has changed, and Russia is on the back foot, forced to rethink its next move in a rapidly evolving landscape. The world is watching to see what happens next, as the balance of power shifts before our eyes. The impact was immediate and brutal. Russian metals giants, once buoyed by Chinese subsidies, are now in freefall. Revenues for major aluminum and nickel producers have plunged up to 30% in weeks. Factories are shutting down, smelters are cold, and mass layoffs are sweeping industrial cities. Communities in Siberia and the Urals are unraveling as thousands lose their jobs. The government's tax revenue is evaporating, deepening a budget crisis. The metal sector's collapse is rippling through mining, energy, and transport. Russia faces an industrial crisis not seen in decades, all triggered by a single decision from Beijing. The dominoes are falling fast. The Kremlin is running out of options. The consequences are only beginning to unfold. How did Russia get here, to this precarious position? It all started after the 2022 invasion of Ukraine, a pivotal moment in recent history. Western sanctions swiftly cut Russia off from its biggest markets and the London Metal Exchange, a critical blow. With nowhere to sell its goods, Russia faced an impending economic disaster, until China stepped in to offer a lifeline. Beijing saw an opportunity for itself: cheap Russian metals for its factories and increased leverage over Moscow. Chinese state firms eagerly bought up Russia's surplus, paying above-market prices in a secretive subsidy scheme. In return, Russia became a captive supplier, selling its resources exclusively to China, limiting its options. The deal kept Russian factories open and the Kremlin's coffers full, at least for the time being. For China, it meant a steady, reliable supply of strategic metals at a bargain price, strengthening its own industries. But Russia traded its economic sovereignty for short-term survival, a decision with long-term consequences. Beijing dictated the terms. Moscow found itself increasingly dependent on its favor and goodwill. The lifeline that was supposed to save Russia became a chain, binding it tightly. Now, with China pulling back, that chain is dragging Russia down. The gamble has backfired, badly, leaving Russia in a vulnerable state. Why did China pull the plug now? Beijing faces its own economic slowdown, property crisis, high youth unemployment, weak demand. Subsidizing Russia is a luxury China can't afford. There's also fear of Western secondary sanctions, China's banks and companies can't risk being cut off from global markets. The US and EU made it clear, help Russia or do business with us, not both. China wants to repair ties with the West and lead the global South, not be seen as Russia's enabler. Pulling support is a calculated move to protect its own interests. The no-limits friendship was always about strategy, not loyalty. When the costs outweighed the benefits, China walked away. For Beijing, self-preservation comes first. China's move is part of a bigger pivot. Beijing is diversifying its partnerships, reducing reliance on risky allies like Russia. Trade with Russia is leveling off, while investment in Southeast Asia, the Middle East, and Latin America is surging. China is locking in energy deals and investing in renewables abroad. The goal: build a resilient, global network, not be dragged down by Russia's troubles. China wants to lead the global South and needs to keep its options open. By distancing itself from Moscow, Beijing can engage more credibly with other nations. The message? Russia is important, but not irreplaceable. The era of blank check support is over. Russia now has to compete for China's attention, and it's losing ground. The numbers tell the story. After sanctions, over 90% of Russia's metals exports went to China. In 2023, Chinese imports of Russian aluminum jumped 66%. The secret subsidies pumped $60 billion a year into Russia's metals sector, more than its education budget. That money kept factories running and workers employed. Now, with subsidies gone, Russian companies must sell at depressed global prices. Revenues have dropped 20 to 30%, wiping out profits and pushing firms into crisis. The Kremlin faces a stark choice: bail out the industry or let it collapse. But the budget is already stretched by war. Any bailout means deep cuts elsewhere. Russia is cornered, and China is holding the cards. The partnership's math has changed, and Moscow is losing. The fallout is just beginning. When Russia needed China most, Beijing stepped back. The no-limits friendship has clear limits, defined by China's interests. Russia is now painfully aware of its junior status. China sees Russia as useful, but not essential. Moscow's dependency has given Beijing immense leverage. The Kremlin's narrative of a new world order led by Russia and China is shattered. China is building a sphere of influence, not an alliance of equals. When interests shift, so does support. For Russia, this is a harsh lesson in power politics. Alliances built on convenience are fragile. Russia is learning just how lonely that can be. So what's next for this once celebrated alliance? The no-limits friendship between China and Russia is forever changed, its foundation now visibly fractured. China will continue to work with Russia when it serves its own interests, buying cheap energy, leveraging Russian resources, and using the partnership to challenge the West when convenient. But the illusion of unconditional support has vanished. The trust that once defined their relationship is now replaced by caution and calculation. Russia, meanwhile, faces a severe economic crisis as its vital metals industry collapses, leaving factories idle and workers uncertain about their future. The Kremlin is forced to drain its financial reserves to manage the fallout, further weakening its war effort and straining its economy. China, on the other hand, is focused on stabilizing its global position, keeping its options open, and carefully weighing every move on the world stage. Moscow is now more isolated and dependent than ever before, with fewer allies willing to offer real support. The world is watching as these authoritarian partnerships reveal themselves to be transactional, not unbreakable, alliances of convenience rather than true loyalty. The West now has a unique opportunity to exploit these growing cracks and divisions, reshaping the balance of power. The $60 billion shock is more than just an economic event. It marks a turning point in global power dynamics, signaling a new era of uncertainty and shifting alliances. But one thing is clear: Russia can no longer count on China's blank check, and the days of limitless support are over. The world order is shifting, and for now, Moscow is left out in the cold, facing an uncertain and lonely future.